say what you want about this market. It's got a real good sense of humor. Last night, we finally got some results from GameStop. Its first earnings report since the stock shot into the stratosphere. And what happens? The company did almost everything right. I mean, they delivered an impressive set of numbers. They're making some smart moves. Business is doing surprisingly well. I think it was about as good as anyone could have reasonably expected. Better! Much better than anyone imagined 3 months ago. So what happens? How much does it go up? 200, 300%? No, oh, sorry. It gets pulverized. It plummeted $61 or 34% today. Paradoxical? GameStop finds itself in a really tough position where nothing is good enough because the stock's had such an explosive move over the past few months. If this stock were still at 15, I bet it could have rallied 5, maybe even 10%. But it was at 181 going into the quarter. And that's a very different story. I don't think there was anything GameStop, the company, could have done or said to make this into a positive catalyst for the stock. Now, it doesn't really help that management's being incredibly cagey. And I'm sure those Wall Street bets guys are saying, boy, are they cagey. They didn't take any questions at the conference call. They didn't give us guidance for the full year. They stonewalled on some important issues. I think that's deliberate. Ever since GameStop became a red-hot meme stock, management has been very quiet. Like, they'd rather create a sense of uncertainty, maybe it's mystique, than risk alienating their new shareholder base. It's probably a smart move. But it means you're never going to get the kind of astonishingly bullish commentary that the Wall Street bets crowd had been hoping for. I never said praying for, I said hoping for, because I am a gentleman and a scholar. Still, the actual results were pretty impressive. But before we get into specifics, let me set the scene. GameStop ascended to meme stock status in January after the brilliant, amazing, incredible Ryan Cohen, the co-founder of Chewy, bought a big chunk of stock and joined the board of directors. Cohen's the foundation of the bull thesis. You got a lot of people arguing that he can transform GameStop, look, a once beaten down video game retailer, into something with much better growth prospects because of his phenomenal track record at Chewy, which is the digital pet food kingpin. Of course, it's not totally clear what that transformation would look like. Dog food and Call of Duty. But like I could resist that one, right? But the new shareholder base does want a radical departure.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.